It's not just the president's comments, but the fact that we may be starting to see some strain in this price war.
Yeah, sure, that's right, Sherry. And in fact, you just have to look at what the price has done since the start of the year. It's down around 60% to see that this has got to be hurting pretty much everyone who is a major oil producer. And that includes, of course, Saudi Arabia and Russia, the main protagonists in this price war that has so sort of exacerbated the price moves that were initially caused by the spread of coronavirus. So as you mentioned, the very sharp gains yesterday, it helped in part by President Trump saying he might step in and try and do something to resolve this standoff. It remains to be seen exactly what he can do. I think it's probably going to come down to Riyadh and Moscow to see who blinks first on that one. And we had an indication that there might be a slight softening coming with the Saudis and Iraq, both announcing that they'd scale back some rebates on freight prices, which was a sign that they're sort of softening a little bit of their stance in terms of forcing those prices down. That also helped spark that move, that strong move up overnight. And we've seen pretty much consolidation this morning. In fact, it's been the first sort of calm morning we've seen for quite a long time in the oil market.
Jim, how much influence does the president actually have in the standoff between Russia and Saudi Arabia? Because you're seeing, the market's really kind of pricing this in as a done deal.
Yeah, that's a very good question, Heidi. Of course, President Trump has made a point of nurturing relationships with Putin and the leadership in Riyadh since he started his presidency, and of course that's been very controversial in the US and across the globe. So I mean, I guess if those relationships were ever going to pay dividends, then now is the time to start cashing in on them. So yeah, a lot of it will come down to just how strong those relationships are. I suspect. The Saudis and the Russians won't do Trump's bidding. Of course they won't. But also there's a certain amount of self-interest here. Price is sub $30 a dollar. It's going to have a huge impact on the balance sheets of both these countries, and that's got to be focusing minds. We've had plenty of analysts come out and say it's just not sustainable for these countries to operate effectively with prices down here. And given we still don't know how severe the demand shock is going to be from coronavirus, I think there's the market's certainly starting to price in a greater likelihood that we get some sort of détente between Moscow and Riyadh in the coming days and weeks.
Jim, talking about demand, we keep hearing the factories in China are starting to reopen, and the coronavirus cases have also really plummeted since the beginning of the outbreak. So could China help offset some of the weakness that we're seeing in the industry?
Yeah, it's possible. I certainly think that that's what a lot of producers will be hoping, that Chinese demand comes back on stream faster than perhaps we thought. Certainly that the numbers in terms of new cases in China appears to have slowed dramatically. And we're hearing widespread reports that the economy is getting back to normal. And so if that demand does come back on, that will go a long way to helping the market recover. But I think, given that we're still in the early stages, very much the early stages of the virus in North and the US, I think absent an agreement between the Saudis and Russia to scale back production, I think the market, you can't call an end to this rout just yet. And in fact, we did a sweeping survey of traders across Asia yesterday on where they see the bottom, and plenty still think there's the scope for sub 20 if we don't get an agreement between Russia and Saudi Arabia.